Disclaimer: this content is for educational and informational purposes only. It is not financial, investment, tax, or legal advice, and I am not a licensed financial advisor. The opinions shared in this video are my own and are based on my personal investing journey and experiences. Always do your own research and consider consulting a qualified financial professional before making any investment decisions. Investing involves risk. The value of investments can go up or down and could lose some or all of your invested principal. Past performance does not guarantee or predict future results. Nothing in this video should be interpreted as recommendation to buy, sell, or hold any security. You are solely responsible for your own investment decisions. Hello and welcome to Always Be Investing. Today is Friday, August 7th, 2026. Day 23, $2,300 invested. The economy lost jobs. So why did stocks hit a record high? Market scorecard, Friday close and weekly performance. S&P 500 plus 0.62%. Nasdaq plus 1.3%. Dow plus 0.28%. S&P close 7,757.64. Weekly gains, Nasdaq plus 5.19%. S&P 500 plus 3.58%. Dow plus 2.96%. Best week since April for the major indexes. The S&P 500 closed at a new record high. Tech led the rally with Nasdaq strongest. Small caps also joined the move higher. The weird part? Weak economy headline. Strong stock market reaction. Jobs minus 23,000. Fed fears eased. Stocks rallied. The market was not celebrating job losses. It was pricing in a lower chance of another rate hike, and that lifted stocks. July jobs report, the shock. The numbers missed badly. Actual payrolls, minus 23,000. Expected, plus 80,000. Unemployment, 4.1%. May-June revisions, minus 103,000. Beginner translation, hiring was much weaker than Wall Street expected. The employment rate fell only because labor force participation dropped. Revisions made the prior 2 months look weaker too. The trend matters more than one number. Why the Fed matters so much. Rates are the invisible force behind stock prices. 67% a week ago. 44% after jobs data. September rate hike odds fell sharply. Lower expected rates can make future profits more valuable. That tends to help growth in tech stocks first, but inflation data can quickly change the story. The rally had backup. Strong earnings kept investors optimistic. 85.1%. S&P 500 companies beating estimates. Earnings season support. Why this matters? Lower rate fear helped the market today. Strong earnings gave investors a reason to believe. The tension? Profits look strong, but the labor market looks weaker. This is why indexes can rise, even when the economic headline looks scary. SpaceX passed its first big lockup test. More shares became tradable, and buyers still showed up. SpaceX today, plus 15.8%. Key risk, lockup supply. Beginner explanation, a lockup expiration lets more insiders or early holders sell. That can create selling pressure because supply rises. Today, demand was stronger than the supply fear. Important, one strong day does not remove future volatility risk. Big individual stock moves. A market rally does not lift everything equally. Atlassian, plus 35.3%. Airbnb, plus 17.4%. Microchip Tech, plus 13.9%. Trade Desk, minus 21.9%. Lesson: index investing smooths out the company-by-company chaos. Even on green days, bad guidance can crush a stock. A diversified ETF keeps one bad earnings report from dominating your future. This is exactly why ABI uses VTI as the core vehicle. The beginner investor lesson: the stock market prices expectations, not just headlines. Headline: jobs were bad. Expectation: the Fed may pause. Price: stocks rose. Do not panic buy or panic sell from one headline. Ask, what does the market think this changes next? ABI action for day 23. When the news is confusing, the plan stays simple. $100 VTI buy today. $2,300 total invested through day 23. The point of ABI is not predicting every headline. The point is building the habit before the future arrives. Record highs can feel scary. Bad economic headlines can feel scarier. Consistency is the edge. What to watch next week? The next test is inflation. 1. July CPI. Wednesday, August 12. Cool inflation could support the rally. Hot inflation could challenge it. 2. Fed odds. Will 44% fall further? The market will keep repricing the chance of September tightening. 3. Earnings. Can profits stay strong? Strong earnings are the bull case. Weak labor is the warning sign. We do not need perfect certainty. We need a repeatable plan. Always be investing. This is for educational purposes only. It is not financial advice. I'll see you next week.